2, 1.
Good morning, traders and investors. Q2 earnings season rolls on, and what you see on the tape is sometimes more important than the news. We'll discuss that in just a few minutes. Tons of other earnings reports here. GM trying to get over 40 on their beat and raise. Tommy Lackey Jr., 835. The man that told us the recession might not be coming to the second half of the year or at all. He's got some good charts to show with us. It's Tuesday. It's the day before a Fed meeting. It's pre-market prep. Let's get going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
All right, good morning, team. Up 6.25 handles, 45, 89, 75, within striking distance of that high close of the move at 45.97. The buck continues a 6-day rally here, up 17 cents at 102.25, 101.25. Bonds in the red by half a point, 125 and 22 30 seconds. We got resistance at that 79 handle in crude, down a couple pennies, 78.72. Gold up a couple bucks, 1964.40. Silver the same, that's up a dime, trying to work its way towards 25 at up 11 cents or 10.9 at 24.54. In Bitcoin, trying to find a home at 29K, that's up $15. Let's bring in Triple D here, and we got some interesting price action, pre-market price action to discuss.
All kinds of action here. And obviously lots of earnings here. We're now starting to get into the heart of earnings season. We will get Microsoft and Google tonight, and those are the two biggest reports that we will have. This week we're going to get Amazon too, but these will be the two biggest reports that we've seen so far. Lots of other smaller companies, lots of widely followed companies reporting. Verizon, General Electric reported here this morning too. We're going to jump into all these earnings reports. So it's a matter of where you want to start. And then I want to have some fun with the RTX report here too. I've been tweeting up a storm about it. You might know why if you've been following me on Twitter. So it all depends on where money Mitch.
Not Twitter, Dennis. Not Twitter. You're not on
Twitter.
Twitter.
X. It's called X.
Yeah.
Yeah, get it right, dude. Come on, man.
Yes, the financial
Bird
revolution.
is not the word.
All right, let's go ahead. Let's start off with Verizon Communications. And I want to know, because T-Mobile seems like it's starting to take over. In the chat, let us know. Who do you guys use for your wireless? Are you guys AT&T?
I like those.
Are you guys using Verizon? Are you guys using T-Mobile? I'll let you guys know. I'm a T-Mobile guy. I use T-Mobile myself. All right, let's get to Verizon's number here. Q2 EPS at $1.21, beating the $1.16 estimate. Sales at $32.6 billion, missed the $33.28 billion estimate. They do see fiscal year 23 adjusted EPS at $4.55 to $4.85 versus the estimate right now at $4.68. Total wireless service revenues growth of 2.5 to 4.5%. And of course, not bad, at least getting the lift after the recent turn down. And that was, of course, dragged down by the lead talk in the cables, right? I don't know if you heard about that, Joel, when you were away. That's why they went after AT&T and Verizon. It seems like they've been turning around since.
Lead in the cables, and then AT&T said it was less than 10% of their cables, and then the stock rallied relentlessly after that. So
the old lead in the cable.
Yeah, the old
lead in the cable, right?
Verizon up. It was good enough. I mean, the expectations for this stock, we talk about expectations all the time. They're in the gutter for this stock because everybody, including myself, hate on this stock. And I will continue to hate on this stock because I think the core businesses are under attack. I said that yesterday. I think you're going to get lifts. I think you get up to 36. I think you get up anywhere. I'm a seller, long-term seller of Verizon. I've hated it since 55. I hated it at 50. I hated it at 45. I hated it at 40. Hated it at 35. Hated it at 32 the other day. It's back up to 34. So you can say I've been wrong because it's went from 32 to 34, but pretty right from 55 to 34. I still hate on this stock. I think long-term stock goes lower.
Robert Carneal, I was thinking this too when they said they were raising prices yesterday. I thought it was like, oh man, maybe they come out with a bad report, right? And they're trying to sugarcoat it. I don't know why they didn't wait, but I don't know about all those prices that you said, but someone hates it right around 35 right now. Man, you got a big seller there. You snuck over it a few times in the pre-market. I'm also looking at the dailies here, 35.22, 35.24. That's a pair of highs. So if you're buying this one off the open, you get that 35 open. You don't want to see it at 34.80. You just want to see the bids come in. But there's big sellers up here at 35 so far in Verizon, coinciding with a couple daily highs.
All right, let's move over. Let's go to General Motors. So get those motors started. EPS coming in here at $1.91, beating the $1.85 estimate. Sales of $44.75 billion, beat the $42.64 billion estimate. GMC's fiscal year 23 capex at $11 billion to $12 billion versus the prior outlook of $11 billion to a high end of $13. I see General Motors. It did get a little pop on this number,
Yeah.
but one thing that I've been stating this multiple times, guys. I think we really need to watch out for the UAW strike news.
Yeah.
They usually strike against one automaker. They don't usually go against all three, so we don't know which one they're going to go after. Is it Ford? Is it Stellantis? Is it GM? One thing that I'll also mention is the big battle here now is more the EV factories that are being built by these legacy automakers. So what ends up happening is they're going to get paid about 1/3 of the amount that a senior at a regular auto assembly right now, gas auto assembly, would be getting paid. And so right now it's that battle of wages also going into the EV factories that are going to be battling because they want to get paid the same amount. But one thing I also saw was that it takes about 1/3 less of the amount of labor to make that EV than it does that gas combustible engine vehicle. And so I think at this point, there's a big battle going on. And why? Because the legacy automakers, they want their margins high on EVs, and they already have low margins. If they give it up in labor, they won't have margins. So this is a big battle that's going to take a while to kind of decipher. And September 18th is the deal contract negotiations. That's when they end. If nothing happens by that time, you'll probably see a strike.
You said September 18th?
September 18th.
It's a ways away yet, but it's a good point here, Mitch. I honestly don't like the price action. So I don't like that it's beat, and then earnings were fine, but we're leaking here and now we're barely up. I hate seeing that. I'm long the stock in the long-term portfolio. I sold half of it. I'm like, I kind of want to sell it all, but I kind of had it, 32, 33. I picked it up, right at the bottom, really. And I'm like, you know what? You want to have some stocks, though. And I think General Motors is a good company long-term. I do. I mean, I think Tesla's a better company, but, it's like 8 times earnings or 9 times earnings. But again, cyclical. So if we go into a downturn, that, could go down. Most of me wants to sell this position and get out of it today. Part of me is just saying, stop trading your long-term portfolio. So I'm stuck here. I don't know what to do. What should I do? Should I dump my GM? Chat? Let me know what to do. I've got half my position left from my original GM purchase. I'm up pretty solidly in it. I don't like the price action here, but maybe I should just hold on long-term. Even if it drops a couple bucks, maybe I should just stomach it. Bill says sell. Chat, I'm asking you. You guys are making the decision on what I'm going to do with my GM position today.
What's your
Bill
entry?
says sell.
Around your entry?
Yoshi says dump. I was in like 32.5, maybe 33.
That always matters to me. It's where
How
you're
much
at.
money am I up?
Yeah. It really
covered
does.
calls isn't a bad idea, Dino. That's not a bad idea. I could sell some covered calls.
Have you ever seen a company
there you go? That's a good way.
Beat. I mean, they've missed one quarter.
They beat all the time.
Yeah. I'm going.
And they never go up.
I know. Since April, since the middle of 2015.
Don't get the love.
Look at this. It doesn't get the love. Buy more, Dennis. Be a moron. Put more on and more on.
Why more? I don't like averaging up. The name of the saying, Joel, that you've given me all these years is never frown, average down. Don't screw up, don't average up. That should be the other saying. Averaging up. I did. I remember on Celgene, and I
know. I've heard the
I took a
Celgene
40%
story.
winner almost to a loser. This averaging up thing. I don't know.
I think one thing that we got to remember also is that at the end of the day, the high interest rates, it's not the year for seeing massive adoption of EVs. I think what you're going to need to see is even more government incentive come probably from fiscal policy in 24 or 25 for these vehicle companies to really take off. If you got like a $10,000 EV credit, oh yeah, you'll start getting people to go out and get them.
I think
I don't know what I'm going to do.
I think they should change the name of the company, like to Y or something. Something different.
AI Motors.
We're not General Motors anymore.
AI Motors.
AI Motors. AIM. Is that ticker symbol taken?
AIM. All right, let's go.
I'll comment on the price action real quickly. And I would have told Dennis, I would have given you the same advice as I've given you now. I would have said like this 40.5 to 41 zone. Man, it's just looking really toppy in that area. So
it kind of feels like my AMD when it was 128, and we were like, it's kind of looking toppy. I was like, oh, I put it long term. I want to hold it. So
yeah. So I'll see a sell zone here from just above the pre-market high, and we'll just call it, just make it 41. So I would just, if it could take out this 41 area, and it doesn't look like it's going to be today, then you got to, it's also like sleepy on the monthlies too. I know it had a good month last month and a decent month today, but major resistance at 40.5 to 41 for General Motors.
The choice for me is to sell or not to sell. There's definitely no buy in my choice here.
Okay,
so my spidey senses are telling me sell before it's too late. My spidey senses are often correct in the short term. In the long term, they kind of suck, though. So
yeah,
that's the trade-off. I'm really good at short term. Long term is still a mystery to me.
Well, Dennis, what about the upgrades coming tomorrow and later?
I don't know if they're gonna. That depends. If the stock goes down, then they downgrade, which is a good segue into RTX because they just all chase price, which is a good segue into the RTX earnings, Mitch. Maybe we should take us there because we got a fun segment for you here, and maybe a look into how it works sometimes at a media company.
All right, let's go to it. Raytheon Technologies Q2 adjusted EPS at $1.29, beat the $1.18 estimate. Sales of $18.32 billion, beat the estimate here of $17.68. So big beat there on sales. Raytheon raised their outlook here for fiscal year 23 adjusted EPS at the EPS of $4.95 to $5.05, up from 4.9 and 5.5 prior. The sales also guided up there towards 73 and 74 billion from 72 and 73. Yet it seemed like the stock couldn't get a lift here. What happened there?
Got a little bit of a lift. It got a little bit of a lift, and then she just started going down and going down hard. And so I'll tell you, what I saw, and I'll tell you what the media is seeing. Because what happens is when you get a beat raise, and that's basically what RTX just did.
Yep.
And the stock starts going down, everybody's asking questions. Why is the stock down? So then they dig. And you can always, in these 30-page reports, you can always find something, if you want to really dig. I'll tell you from the trading action here, though, in this, it was very obvious that it was one player, one market participant that was selling this stock hard. Why they were selling, we have no idea. Maybe they read, something that they found in the 30 pages. Maybe they, just don't want the stock anymore. Maybe they didn't like the report. Maybe it was but the reason you could tell it was one person was because it was an iceberg order that was walking the stock down. They went offer 97, offer 96.50, offer 96, and then they're trying to lift it because people think it's a good report. Not moving, 95.50, not moving, 95, 94. Now the people who bought 96 are like, oh my God, I thought this was a good report. Now I'm killed. Now they're panicking. So they're just forcing it down, boom, you are going down. Big hedge funds, don't kid yourself, can push price around on the reports. Why do we know this was one player? Because you think there's two coincidental players that have icebergs at the same time walking down, and this is all, it wasn't like just trading like Microsoft. This isn't Microsoft. It's RTX. It doesn't trade a lot during the
pre-market. Yep.
In the pre-market, and it's traded a lot here because somebody has just kept their finger on the sell button and they are relentless. They are still selling out here. We don't know why they're selling. They could be selling. You're allowed to sell stocks. It's allowed. So we don't know why they're selling, but I can tell you there was one participant, and maybe they're gone now, but there was one participant that just would not let off the sell button. So then you go and you're like, okay, well, why are they selling? Find, why is the stock down? So what happens is when there's no obvious reasons, media companies, we dig. Is there a fundamental reason here? Read the report. Get away from the headline and dig deeper. So it's funny. Becky Quick was on CNBC, and she's like, they're covering the stock, or RTX, beat, raise. And then she's like going to say, oh, this is why it's down. She's looking, it's down 3%, though. She's like, well, I don't know why it's down 3%. We'll have to get back to you on that. So then they go to another segment. So, in the background, the producer's like, why is RTX down? Dang. No, that's not good enough. Find me a fundamental reason. Why is RTX down? Dig. So then they're digging. That's how it goes. Dig. They got the diggers. They're digging into the report. They found some significant portion of GTF engines powering the A320 NEO aircraft may need inspection 9 to 12 months from now.
Did they use ChatGPT for that?
But it's funny. Another media source was finding, we have a little bit light on the free cash flow. Reported almost the same time. Two different headlines justifying the reasons. You know why? Because they got the diggers out there and they're trying to dig. Meanwhile, it was one participant knocking it down, and maybe they were the first to see that the engine aircraft, headline there, or maybe, just maybe, there was one participant that just wanted this stock down. That happens too. It's down 5, but ask yourself, it's down 5.3% here right now. RTX, which doesn't move that much, getting absolutely killed because some engines may need inspection 9 to 12 months from now. Maybe it's down for that reason. It might be. Maybe that is the reason. But I can tell you that one person was the reason it was really going down. Maybe they read that and that's why they were selling. But a lot of times stocks move and we actually don't know the reason.
Exactly.
90% of the time we probably do. They lowered guidance. Obvious. The stock's downgraded. Obvious. Just sometimes it's not that obvious. And sometimes they want to find a fundamental reason. And the diggers will dig. And they will find a fundamental reason. I get called from Reuters reporters all the time or from other reporters. Why is this happening? Why is this happening? And, sometimes you got a pretty good feeling of why it's happening. And sometimes you're like guessing. It's a little bit of guesswork too. When it's not obvious, it's nothing against the media. We're a media company too. But sometimes, behind the scenes, there is some guessing to why a stock is doing what it's doing. And sometimes, to JC Perrett's point, sometimes it's just doing whatever the hell it wants to do because supply and demand. Tim Qua, sometimes it's not a fundamental reason. Sometimes
Dennis, explain iceberg orders.
Sometimes it's not a fundamental reason.
Yeah, let's take iceberg's orders here to a beginner's level, Dennis.
Yes.
So what are you seeing on the level twos? What are you looking at?
Let's go to the Titanic analogy here. So you got the tip of the iceberg. So you got the iceberg, there's your water, tip of the iceberg, but it's really big below. So they show 100 or 200. In this case, they were showing like 500 shares and they were knocking it down. They lift 500. Oh, it refreshes. It has more 5. They lift another 500. It has more. So it's only showing part of the order. I can tell you that 2, 3, 4, 500 share orders that were coming down like that were a lot bigger than 500 shares. And the majority of that volume in the first like 20 minutes was one participant just selling. There you go. What a graphic. Where did you grab that from?
I got you, my friend. I got you.
Oh, my gosh, Money Mitch. You dig. Dig, Money Mitch. He dug quick, man. That Money Mitch is a good digger. But look, that's what it is. So you're showing 2,000, but you really got 80,000 to go. So that 2,000 will just keep refreshing until 80,000 is gone. Because you don't want to show 80,000 shares. But it's like, oh, my gosh, they're selling the world here. And then every high-frequency trader comes in and hammers the bids in front of you. So the institutions are going to hide their hands to a certain extent and bring it down. And that's, in this case, what was happening. And that participant just maybe wanted out. They didn't like what they read. They wanted out. They were working. It's not like they showed big size and were trying to really push it down like that way. but they were using icebergs and they were just trying to get out. One person, we don't know who it was. We probably never will know who it was on RTX, but one person wanted out in that first 20 minutes, and they kept walking it down, and maybe they got out of all of it now, but they wanted out of the stock.
They did. Real quick, just on the price action, they did walk it down. I just saw a print at 91.72. So that is just about the low of the move. The low of the move is actually 91.95. So if you're so inclined, I don't know if this guy, girl, bot, or whatever is still around. Keep an eye on that 91.75 to $92 area. We'll see. We'll see if that holds a pre-market low. Quick story regarding looking for news, and I don't know if my buddy Opie is listening here back on the oldie desk. And we used to trade, some thinner stocks. And when you have a big position in a thin stock, and like someone comes in against you, like like you're long a stock, and he was. I think the stock, there was this chicken company, man. I wish I could think of it. And he had like a big position in it, and the thing's just going down. And he's saying, I need news. And I know there's news on this stock.
Yep.
And he would tell his we each had like one or two assistants, and we had this thing called Bridge, which was where we got our news from. He goes, I want you to sit there and I want you to hit refresh on the Bridge button until we see the news on this stock. And he would be like, I'm going to sit Indian style on this trading desk until I find out the news. And we'd be like, well, maybe there's news, or maybe someone's just hammering this stock. So
that's what it is.
Yeah.
And everybody wants, like, media doesn't want to hear some technical reason. They don't want to hear, oh, there was one participant that was just knocking it down for the first 20 minutes. They want a fundamental reason. They want to print fundamentals. People like to read fundamentals. People in the market that are traders don't mind reading all the technical stuff. Nobody that is not a trader wants to read there's support or resistance or this or it's trending higher. They want to read the fundamental reason for it. So they have an obligation almost to find a fundamental reason to justify a move that may not be fundamental. In this case with RTX, it might be. Maybe it was the engines thing. I'm using it as an example because there's going to be multiple people reach out to me today. You're an idiot, Dennis. That engine's going to cost them so much, and maybe that is the case, on this. But I'm using it as an example that there is not always an obvious reason for a sell-off. Most of the time there is, but sometimes there isn't.
Yeah, and sometimes it doesn't matter if a stock beats and guides up, right? Yes, that makes sense in the fundamental game, but the truth is it's not always fundamentals that move a stock. And I think that's one thing that we all need to remember. Right?
Yep.
I did throw up here. Yeah, I did throw up here Center Point Securities. That's where I got that graphic from. So I did have a nice little kind of outlook on iceberg orders. If you want to check that out, I'll go ahead and throw that up there. So shout out to Center Point. Let's keep going. Let's get to the next stock here that I want to talk about. Let's go to Spotify. Who's jamming their music? Because someone said hammer time on Spotify because someone's hammering this. Spotify Q2 total revenue at $3.117 billion, up 11% year over year. It seems like premium subscribers were up 17% year over year. They're not liking Spotify right now.
No, they're definitely not. And this is one of the more obvious ones why this was down. There's an EPS miss here. There's revenues not great, subscribers, nothing really fantastic coming out of here. So sometimes it's just blatantly obvious. And in this case, it was obvious here. So stock selling off for fundamental reasons today on this one. So you have an RTX down because of an engine thing that might have to get recalled here, but they're still raising guides. And it was Spotify, which was pretty much a disaster. So both down 5%.
I had someone on Premarket Prep Plus that was following this stock and a couple of weeks ago, and I just took my eye off it, and I'm like, can this thing ever get through 160? And I remember just talking about it for days, and it did. It got to 160, and then sellers laid off 180. That's all past history now since we're down $9.50. Pre-market low. Someone got real excited here when they knocked it down to 144.50. Well, I wouldn't have been too happy if I would have been out there trading it or looking at it or trying to buy, because I would have been all over this thing at like 148, 149. I mean, how many lows do you see in this area? 40, 48, 47, 47, 54, 48, 36, 49, 12, 49, 37. These are all consecutive days. So I'd be looking for that. We're $7 off it now on the rally. I don't think you're going to see that level again. So if you want to cover short or look for a long, I think you got to drill down on your shorter term charts. But that was a little bit overdone on the downside, in my
Yeah,
opinion.
I think so
And
too.
yeah, and now, oh boy, now we'll see if people reload at 160 again. This when it got above 160 to 180, that was Nirvana there. That was selling into strength. Now it's a different market structure. We'll have to see, now this is when you got to tune into your daily charts to see where all the people that didn't sell into strength are going to try and wiggle out of Spotify.
Here's this interesting stat from released 6 days ago from Influencer Marketing Hub. They said that roughly 22% of all internet users listen to podcasts. And so that's why I mentioned it here with Spotify. As we continue to see that number grow, I think one thing that you're going to see more and more of is companies like ESPN talking about it right now, that they're going to be doing simultaneous cast to radio. Also trying to do kind of more of that podcasting style of lower kind of spending on ESPN, lower kind of spending there, but podcasting continuing to grow. I'm seeing more and more brands doing that, using athletes to open podcasts. So I think Spotify in the long run could get a lift as people continue to grow and listen to podcasts.
We're on Spotify.
Yeah, we're on Spotify ourselves. Yeah.
That's reason enough to buy the stock right there.
There you go. Pre-market prep, baby. Hit the like button. Let's keep it going. Let's go to General. Let's go to General Electric.
General Electric?
Yeah, let's go General Electric. Q2
GE,
adjusted
holy mackerel.
EPS at 68 cents, beating the 46-cent estimate. Sales at 16.7 billion, beat the 15 billion estimate. Revenues at 15.9. They raised fiscal year EPS guidance at $1.70 to $2. Well, it was at $1.70 to $2. Now at $2.10 to $2.30. What I've said about GE, I've said it all year long. Channel station. And if you can get it off the bottom of that channel, why not, man? It's worked like 30, 40 times this year.
I still, and again, GE, maybe it was just so bad it was good at a certain point in time. This has been a 20-year
I tried to convince these guys earlier this year on GE. They were like, I'm not listening to you, Mitch.
You've been shorting it the whole way up. You've been trying to short this thing.
I played it both ways. I played it both ways, Joel. I played the range.
It's been just a 20-year disaster. Anybody who invested in GE 20 years ago is still down significant amount of money. It has been
that's the reason why you guys don't even look at it.
Maybe it just got to a point where, it Culp in there and maybe he's turning it around. And obviously this has been one of the best stocks of 2023. So we'll give you that. The short term for GE has been amazing. If you are in GE for the last 6 months, you're like, this is such an amazing company. If you're in it for the last 6 years, you're like, this company sucks. If you're in the last 20 years, you hate this company. You literally just hate this company. I mean, I have no idea why they want to trade it with a 50 PE, but they do. It's had that there for a while. We've argued against it on this show because I don't get, it's making $2 and sure, they raised guidance. That was good. 230 would be good. But 230 is still trading 55 times earnings, 53 times earnings right now. So, I mean, if they hit the higher projections, it's expensive. But, they're giving it a pass, and maybe they think they're turning around, and maybe they are going to turn around, and maybe this thing's going to eventually be making $4 or $5 again. And then, it's if this apparent, overvaluation is going to look as bad. But I'm just not investing in GE because it's been a dog for too many years, and I don't invest in long-term dogs.
Boy, oh boy. 116 is the level. I don't know if you're going to get a look at it today. You hit it 116, you hit it once, you hit it twice, you hit it 3 times. The lady again and backed off. So that person out at 116. Maybe they moved it down to 115 right now. I don't know where your targets are would be on this one. It's a reverse split stock. Let's see where the next monthly. Oh, look at that. January, if you've been waiting since January of 2018 to get your money back, well, it traded a high of 116.33 in January. So that's just like a major level today. I don't think you're going to get a look at it today, but if you do, I'd call that resistance. Where to buy this thing on a pullback? Uh, it wouldn't be before 111. Yesterday's high, 110.98. And boy, that GEHC has done well too. So if you got some
You
stock
got
from
that too. That's a good call, Joel. You got that too, actually. This G's
Yeah.
just killed it.
Holy-
Last year, it's been unbelievable. The best stock in the last year and the worst stock in the last 20 years. There's not a lot of stocks that have done
Sometimes,
that.
guys, stories change, right? Sometimes stories change. It seems like GE's story has changed. The only question is, will it come back to be the way it used to be,
And
right?
maybe, you know, if you look long term, you're still way down. Like we've had reverse splits in there and we've had everything. What's the all-time high on General Electric?
I think that's
Can we
the
go back
problem
far
too,
enough?
right?
I think I just saw 240. I just
240?
yeah.
Is that what it was? Way back, way
Well,
back when
what about early
interest
2000s?
went on.
This is going back. This
I'm
is
going to look too.
250. I have 252.93. But back at the Bright office when this was the biggest component,
300. So I just
359,
ballparked out the chart. I have the
77.
long-term chart. It's like 360 back in
about
the year
360.
2000.
wow.
Yep.
23 years ago, this stock had $360 a share. Today, 23 years later, we are 110
Down 65%.
in 23 years. Wow.
Hey, but we're
Moving
up pretty
on.
good from this from the beginning of the year, baby. That's what happens.
Very good
That's
from the beginning
trading
of the
for you.
year.
All right,
Just
let's
like
go.
that Upstart, just like that Carvana. This is the best stock of the year, Carvana here. Still pretty bad from 2 years
Let's
ago.
go to the
best stock
preview of
this
the
year.
earnings. Let's go to the preview of the earnings. Of course, big reports coming in today. After the bell, of course, we'll get Microsoft, we'll get Google. Let's go ahead. Let's take a look at those reports, at least the outlook here. I'm going to put up Benzinga Pro here to take a look at the earnings that could be coming. First one, we're looking at Alphabet. I'm looking at GOOG here. It looks like I have an estimated EPS at $1.34, estimated revenues at 72.78. Of course, recently we have gotten some disappointments from Google, especially in kind of earlier 23. The first quarter in February, we missed there about by 12.5% on the EPS. Will we miss again on EPS?
Expectations very high for Microsoft in this quarter. For Google, I don't think they're as high. You want to see them talking, the AI story more. I mean, it's going to be about the story here. We know Microsoft is going to be non-stop talking about ChatGPT and taking market share in search. And, that's going to be at the expense of Google because we know the Microsoft CEO likes to talk, maybe more than the last person. So, I mean, they like to talk. So with that being said, I just think expectations are really high.
Yeah, I don't know what the expected move in this one, but just throwing out the high of the move, I'm just looking at, for most of June and then a couple times in July, you've topped out at the 127 area. That's $5 up. So don't even know if you're going to get that. I'd even go 125 here with a pair of highs. Coming back on the downside, when you have these gap situations, as long as it can stay above 115, you just got to, maybe be in like the meta camp. Like it has that gap and it's not going to fill it. So I'll go wide on this one. I say, until it breaks down 115, looks okay to the upside. And then I just think you'll see layered sellers at like 125. And if it gets through there, 127. So not a big help on the Googster. RTX, just an update. Dennis, I think they mopped that guy up maybe at 92.
Finally done?
Yeah,
they're
I
finally
don't
done
know.
selling. They've been selling for an hour and a half.
Yeah. Yep. They're like,
They may be finally done selling.
Oh, I told you to sell 10,000. You sold 100,000? No.
That's happened before too.
That's
What do you mean? I told you to sell
slight
$10,000
hiccup.
or $100,000 worth, not 100,000 shares.
Dig, dig, dig.
Dang.
All right,
Dig
team, let's go
harder.
ahead. Let's get to our guest today. I'll try to keep Dennis in check here. I know. Trust
No,
me. He's
some
enjoying
people
it
love me,
today.
some people absolutely hate me.
All right, we're joined by Tommy Lackey Jr. Tommy, how you doing on this this Tuesday?
Doing great. Waiting for Wednesday, I guess. But things
Yes.
are going well here.
Okay,
How
good.
about yourselves?
We're doing good. I just in our preview to the show, I said the man that came on, earlier in the year and said, recession maybe, not in the first half of the year, maybe the second half of the year, and there was a maybe on that. Before we get to some sector rankings here, are you gonna push it out to 2024 on us now?
That's a really hard one, and it's still because the same theme is there. The markets have been much stronger than I expected them to be, but so has some of the economic numbers and some of the things that I expected to roll over just aren't budging. And there are some logical reasons for it, like housing. We're still at almost a 5 million house deficit in the United States because there was so little building between 2010 and 2015. So we're still playing catch up in places like that, which are a big part of the numbers they have out there. However, I have to say, I stick with the same thing I said before, is that the longer the Fed keeps rates high, raising them to kind of shock things is one thing, but once it becomes kind of a longer term, they're going to keep them up there, I think it hurts more of what I would say about the 200,000 income and below. And I know that sounds like a high number, but really, I believe a lot of those people are leveraged out. So these interest rates staying high for a while, I think, is where the problem comes. So that's what I thought would affect us by the second half. And it still may, but honestly, things are continuing to fight through it pretty well. And again, we always got to realize the markets and the economy are two different things.
That's a good point there too, Tommy. I mean, we do it on this show as well. You're like looking, okay, well, if this economy is going to roll over, the stock market's bound to roll over. And I mean, that's just not always the case. So sometimes stocks can trade and differentiate from even their own fundamental case here. I was arguing that with RTX here this morning, but just on a short-term basis. But I mean, what do you see? Let's take it away just from that for a second, the economic talk, because it's such a great point you made. What do you see in the stock price action?
Well, I mean, again, people talk a lot about the big seven leading everything and all that, and they were leading, but they weren't the only thing getting money, especially as the months went on. First part of the year, we had a great rally and things sold off, and then the start to this second rally was really just those big seven, which worried a lot of people, and then it broadened out underneath without many people noticing. And now we're in a situation to where you've seen big hits in a lot of those names the last week or two, yet you're seeing the indexes hold up pretty well, and you're seeing a lot of the breadth hold up very well from a couple of the moving average breadth I sent you, Joel, or the short-term breadth. Neither one of them are looking like it almost felt the last few days just because of some of those real big ones. See, we've still got a lot of green on the screen here. No, yes, technology's taking a break. Healthcare and communication services, which is basically technology. But outside of that, you're still seeing a good bit of move in the area. Now, those areas you're not seeing the green on the short term there, communication services, industrials, information tech, and healthcare. Healthcare itself is leading in some extent, but if you look inside there, biotech and medical equipment are both doing pretty rough because they tend to run more with technology than they do healthcare. So the reason healthcare is performing so much is it's more the stable, the pharmaceutical, the stuff like that, along with the staples and real estate and financials that have perked up the last week or two, but really not for a long period. I mean, financials are a good example. We certainly don't want them leading all the rallies, but if they're doing okay, the stresses we keep hearing about, which are inflation-based and financial-based, aren't really going to be hitting us too hard if they're starting to lead at this point.
All right, let's look at sectors, and you gave us some equal weighted sector relative strength rankings. What are you seeing here, and what are the implications moving forward?
Well, this is a good example of what's happened just over this. I've highlighted the last week here and sorted it by that. And if you notice, it's pretty much financials, energy, utilities, and a little consumer staples. Again, all your defensive sectors. But I wouldn't weigh too much on that, like I said, is because the ones that are down, even with technology, even with internet and semiconductors, or software and semiconductors being down, they're not really getting crushed. It's just some of those largest names that are really dragging it, that ran really hard. It's hard to argue with Microsoft or Meta or some of these coming down a little bit after the runs we saw. It's just real life, but it's not something that's damaging the underlying market at the moment.
All right, and how about intermarket ETF relative strength rankings?
This is something I followed for a long time after reading John Murphy's intermarket analysis book. Really important to where he always talks about, depending on which type of asset class is leading, can tell you about where we are. So I decided just to put them in a relative strength ranking and do it that way, because then you can know what's outperforming what else. And if you look at this, anytime we have number one, actually, yeah, there you go. Anytime we have the equities indexes in the top half of this, I'm pretty happy. The further up, the better, but the top half is fine. But look what just jumped in number one today. As of yesterday, it was still the equities, but USO and oil jumped in number one. And this has been one of the areas that is kind of a juxtaposition for me, because I have a big position in it. I've liked it for a while, even though it's been real volatile this year. However, at this point, if it does lead higher, that's a large underlying inflationary trend that people were hoping is disappearing at the moment. So overall, this list is in the order I want it to be. I want equities, I want commodities, I want things like that on the higher end. But having commodities up here and moving up pretty quickly, as you can see over there on the right where it says RS movers, that's how many points it's moved in the last 5 days. Jumping up like that could be bringing back some inflationary pressures into the second half, and that's going to put the Fed in more of a pickle.
All right, let's take a look at some charts here, and I see you have comparison of the spider, the Qs, and also the Russell. We're all waiting for the Russell to wake up. It's like, come on, Russell, help us out here. Participate in the rally. It has here. So let's bring up these three. I mean, you know, where's the sell trigger? Where's the weakness? Are you selling into strength at this point, or you just waiting to get taken out on some weakness?
I think you got to wait to get taken out, and here's a couple reasons. Number one, this is a 65-minute chart, so this is an intraday chart, and it shows that pretty much it has been, and the leader really has been more the small caps on this last leg up. It's had the hardest run, which is a good sign to broaden out. I know Ryan Dietrich and a couple other guys have talked about small caps broadening out and kind of being the leaders in the second half, and I agree with that sentiment. Basically just for the scenario that some of these large caps have ran really hard, and they don't necessarily have to come back a lot, but they certainly could use some rest. And while they're resting, that money is going to want to find somewhere to go. And that's the lifeblood of market movements, is the rotation. One sector is not going to lead a whole rally the whole way. So you've got to be comfortable and be paying attention to that rotation. And that's what we're seeing right now, even if it's short term to these defensive sectors. Gives them a little love for a little while the faster growing and the more cyclical type stuff rests here a bit. And in the summer, that's not an unusual thing to happen.
Okay, in all the years of being on the show, we've looked at a lot of different charts, but we've never looked at a 65-minute chart, Tommy. What tell us what the proof in the pudding there.
65-minute comes from Brian Shannon of Alpha Trends. He taught me this over a decade ago. And basically it's because it breaks up the day. Instead of a 60-minute chart where you have 6.5 candles, the 65-minute chart breaks up the day into 6 equal time periods.
Let
So
Brian
it
Shannon
allows
know
you
that.
to have, instead of having a half-hour candle on the front half or the back half of the day, it allows you to have an evenly distributed day. I've used it for a long time, and this what I call the triple play charts I post on Twitter a lot with these three, because I believe looking at this same setup on a 65-minute, a daily, a weekly, and even at the end of the month, I go to monthly, into the quarter, I do it quarterly. Looking at this exact same setup on these different time frames gives us a true, consistent view of kind of where we are across a broad view of the markets.
Well, I just want to
A lot of
jump in
people
here.
get bored with them. A lot of people get bored with them that I post it all the time. But again, to me, looking at the same thing over and over, you learn more about the nuances and how it actually moves.
I love how you brought in here the relative strength and definitely intermarket analysis. If you guys want to take a look at that book, I will throw it up in the link there. Tommy mentioned a really good book to read there if you want to look a little bit more into intermarket analysis. Now, I wanted to give you a shout out. Definitely, Tommy, you've been on point, probably one of our best guests of talking about how the recession could get pushed back for the second half of the year. Do you still see that potentially happen, or is that just starting to really fall off?
It's losing less credibility for now, but of course, eventually we'll have something. You know, I do think the real estate area is still pushing too hard. I think there is still issues on the commercial real estate side. But the question is, will they find some way to play it with it underneath the table and kind of just kick it down the road like we continually do on a lot of things? I'm not a fan of all the debt. I'm not a fan of all the stuff. But really, the inflation is 100% Congress driven. And at that point, they just threw out way too much money for way too many reasons, and it's still out there. That's what's going to have to stop for inflation to come down. It's not the economy. The economy is doing well and kicking on pretty well most cylinders, if not all. It's just a matter of there's a heck of a big drag there from all that money Congress has thrown around for the last 4 or 5 years.
All right. The last thing I'll leave off with is, Tommy, it seems like this tide is lifting all boats. That's what we're seeing a lot in the numbers. It's been a pretty strong bull market after a bear market, it seems like. And I can see this just continuing to lift all sectors. Is that what you're seeing out there, at least in the data?
As long as we continue to get rotation, absolutely. You know, that's the thing, is it can't just be relying on one end or one side. But again, for a decade now, technology, communication services, places like that is where the growth has been. Consumer discretionary sure is in there, but that has a lot of technology dribbled in there as well. And so that's where your growth has been, and that's where it's going to continue to be as long as the sentiment is favorable. And when we get in these little tizzies and these little issues like everybody feels we've ran too far right now, we're going to move sideways for a little while, pull back for a little while until there's a real reason to roll this thing over. And I don't think that reason's there at this point. Interest rates are not a good enough reason.
All right. Tommy Lackey Jr., Relativity Capital Advisors, also powerinvesting.com, joining us here on Pre-Market Prep. Great outlook on the markets, Tommy. We'll get you back on again soon.
Thanks, guys. Y'all have a great day. Good luck, everybody.
Thanks, Tommy.
All right. Let's go ahead. Let's get back to the market here and let's take a look. What are we seeing, Joel?
What's going on there, Triple D? Do you have an iceberg here? We're leaking. We are
Starting to leak a little bit, yeah.
Yeah, and Dennis, we talked about this on the closing print yesterday, and it kind of feels like, well, you got a Fed meeting tomorrow. You got some big earnings reports. We saw a lot of choppy price action yesterday. And yesterday morning, I alluded to the trio of lows at the 45.60 area. Well, now you got a trio of highs, maybe a quad of highs in the 45.92, 93 area. So we're setting up here. We're winding up. We got the resistance. We got the support.
It's all about Microsoft and Google tonight, though. That's going to be the next big move.
Yep.
So if Microsoft can come out and keep the AI story humming, come out and beat Microsoft beat Ray's and AI talk all over the call, it could have a big pop. And that would just propel the market higher here. If they come out and the opposite occurs, that they actually don't raise, they're going to beat. They're going to beat on both top and bottom.
They do. I was going to say that. When
They're going to
did
beat
they
on
not
top and the
beat?
bottom.
When did
What
they
are they
not beat?
saying, though? That's what the market's going to look at. What are they saying? And is there going to be a lot of AI talk? Are we still talking about, hey, we're seeing, we potentially see Bing taking market share here from Google? Are they talking like that? And that could actually affect Google too. So it's interesting because you get Microsoft, Google report the same night, and these two companies are at war with each other. This is really why Microsoft came out with this Chat GPT product. It's to take market share from Google. So that they are at full war with Google here. So interesting that both these companies are going to report. What are they saying? What are they saying? I'm not going to mention each other directly, but what are they saying? What are they saying about the AI story? It's going to be really interesting. This tonight is everything.
And also,
and then we got the Fed too.
Yeah, and just look at the price action, right? I mean, they're going to say stuff, the market's going to whip around, but if the RTX traders traded Microsoft tomorrow, someone will be like, we're getting out of $500,000 tomorrow, hopefully a pop so we can sell into strength. And if not, weakness. But also, one thing you got to the conference call too, right? Was that a couple conference calls ago? The stock was way down, and then they said something on the conference call. So you're right. That seller's back in RTX now, Dennis.
They won't go away.
I hope they didn't run you over at all. Did you nibble into
not
it at
made
all?
any trades. 0 trades in RTX.
Yeah, okay. You're not trying to fight the guy. Well, we'll see.
No, you don't fight icebergs. So here's another lesson for you in market structure and reading the tape. You don't fight iceberg orders because you have no idea how big they are. So you start seeing when you lift an offer, it's 500 shares and you lift 500 and then you lift another 500. It don't move yet. They're already finding out that you're probably on the wrong side of the trade. There's a reason they're not moving, and that's because they're either too big and they're going to end up pushing the price down, or maybe they even know something. Maybe they knew about this engine thing. We don't know. Maybe they read it before anybody else. But I tell you, you don't fight icebergs. So in any regard here, just because it's not down on fundamentals doesn't mean it can't go lower. I'm just telling you, there's other reasons for things going down. Don't fight icebergs.
We'll see what happened. Let's go to the next one. Let's go to Sherwin-Williams. Q2 adjusted EPS at $3.29, beat the $2.69 estimate. Sales of $6.24 billion, beat the $6.03 billion estimate. Fiscal year adjusted outlook at $9.30 to $9.70 versus an $8.79 estimate. Pretty good beat here on top and bottom line estimates and raising fiscal year 23 and initiating Q3 outlook. So nice little pop here, SHW.
The home builders have been on fire. We've known from all the reports. This is tied right in there. You're painting homes. So, the painting, the home renovations, all that stuff, it's still doing well. The cost of paint is unbelievable. I go, and I'm in Canada, mind you, but you go and you buy a gallon of paint now, and it's like $60 or $70.
Yeah, one little gallon.
Unbelievable. You go back 10 years ago, it was like $20.
Yeah.
The inflation in paint prices is just incredible. Nothing short of incredible here. And don't tell me all those input costs are up that much. So Sherwin-Williams, direct beneficiary of being able to charge more for their product. Yes, the input costs are up, but probably not as much as they've jacked the pricing. So Sherwin-Williams firing on all cylinders here. Again, are we in a situation where, stocks has a lot of good news priced in? It's run from 220 a month and a half, go to 2. Is it overextended? Could this pull have a rug pull? It could. Am I chasing something up 4%? No, but it was kind of predictable this company would probably do well in this report.
This on the upside here, if you were looking at the pre-market high, 86.55. There's a couple monthly highs here too. So 283.15 and 285. So $6 away. We've leaked. Even have somewhat a little bit of opinion here at 283. So I'd use the half and whole numbers. And if you get a rally here, if you don't start getting lifted on those offers, into strength, you're gonna sell into weakness. The top of yesterday's range is $10 lower, 268.80. I would go up a little bit since we're up so much and call 270 potential support on a pullback. Maybe not today, but further on down the line.
All right, let's go to DHR, Danaher Corporation, coming in with an adjusted EPS of $2.05, beat the $2.01 estimate. Sales of 7.16, beat the 7.11 estimate. This was just riding high and just got knocked right back down.
Wow. Somebody had the memo on this one last night too. They were hammering this stock ahead of the report here.
Ahead of it?
Wow. I actually had a good trade on this from the long side, believe it or not, because it went down 251 offer. I'm like, you're giving me a 7-point lead? I was like, I'll take it. So, and I bought the 251, and about 10 minutes later, somebody just bid 255 and a half. And I was like, you know what? Bird in the hand, and boom, I took the $4.50. Thank you very much. I'm out of here. I'm glad I did take the $2.50 or $4.50 because it's been a disaster here all morning here. But somebody wanted out something hard last night. They got out. They were right.
And you got yourself your
Dennis,
taco.
it could have been
I
more
got
than
myself a taco.
200-300 shares. You were the only trade on Wall Street during that time.
No, there was a lot.
I swear, Dennis heard even the Taco Bell noise. I heard it.
There it is. I love Taco Bell. The Taco Bell in the States is so much better than the Taco Bell in Canada. The Taco Bell in Canada,
I'm sure.
Yeah, I don't know why that is, but your Taco Bell in the States is way better. Except you don't have the fries supreme. We have the fries with the sauce and everything on them. That's where Canada's got, the
All right, let's go to notable
I call it
analyst
taco
ratings
hell,
here.
man. At least
afterwards, the toilet bowl is not impressed with your Taco Bell meal.
Guys, we're not talking
too
Clorox.
much information, though.
We're not talking Clorox, guys. We're talking here notable analyst ratings. We're gonna move over here. There's an interesting BTIG upgrading Zscaler to buy. I think this one's an interesting one. Definitely contrarian, as this one hasn't really taken off. It's been trying to get going. I've seen Pan W really take the lead. That stayed up here. Will this start to get the push? Of course, one thing to mention, though, is every time Microsoft keeps mentioning cybersecurity, they just keep getting whacked. So I think part of me is starting to get concerned that the cybersecurity space competition is starting to really kind of affect some of these players.
Money Mitch spot on here again. That is what continues to weigh on these stocks. They were still spooked. PNW, CrowdStrike, none of them have went anywhere since the Microsoft mention. The investors are all spooked a little bit. As it goes, time passes, they might start forgetting here. Maybe this Zscaler can get a lift because of the analyst upgrade here today. But you are correct, Mitch. This spooked the entire sector here.
Yeah.
So that's the concern.
Man, trading up on an upgrade. 35,000 shares have traded. I'm not really, what are you seeing? Anything on the dailies here? No, I would say if you want to target on the, your 2-day high is 152.07. So let's hold 152. Your next daily high, 158.82. With these kind of, what firm was it that did the upgrade?
BTIG.
BTIG.
Yeah, I mean, I don't know. The stock's kind of in nowhere, man. If you're buying it off the open, man, you don't want to see it go down. I mean, that sounds like a pretty simple statement, but if you're chasing this off the upgrade, you want immediate gratification and see it getting up to 158.62 is your 3-day high. I'll just say on the monthlies, you have a wall here from June and July. So if you're a longer term player, you get above 163. I know that's $10 away. Then things really open up to the upside here for Zscaler.
All right, we got two more we got to get through. So we got Walmart and Disney. Let's go to Walmart first. Let's go to Piper Sandler upgrading the big box retailer on Monday to overweight from neutral and hiking its price target here. So Walmart getting the lift here. Piper Sandler announcing $210 price target. I have been watching this space. I will say discount stores are on my eyes right now. Walmart, Costco riding higher. I have BJ's. I've been looking to see if Dollar Tree, DG, Ollie's, those stocks getting off the ground.
I think this could kickstart Walmart, but I'm going to go with what Joel, say what you're going to say because it's important.
I mean, there's got to be some stock in the book in this
Yeah.
thing. And
Yeah.
I mean, just looking at the close from yesterday, there was obviously someone out there at 159.5 yesterday, a pretty significant seller, because it got up to 159.48. The high freaks leaned on it, took it back down. So there's probably size at 59.5. There's probably size at 60. There's
God, there's a
size at
size of
60 and a
60.
half. So man,
Yeah.
it's going to take load of buyers here to have it open over 160 and a half. If you go ahead,
I
Dennis,
think
with
it'll
your comment.
struggle to open over 160. I'm
I
wondering
do
if it
too.
isn't a buying opportunity that some of those sellers in the book hold down that opening price,
Yep.
and then maybe it can pop after that. Sometimes we've been doing some strategy session here today talking about icebergs. The way I sometimes play around size is when you get that upgrade, sometimes if it's going through a level it hasn't been through and you get that size, that holds down the opening price so you can actually buy into that. That holds down the price. And then once that seller's gone, then she goes. So I don't wonder that, that there might be this opening price on Walmart might get held down a little bit from what you're talking about, Joel. And that might give you an opportunity to get in this thing, and maybe it has to move after the open.
All-time high, 160.77. That was back in August of 2022. We're going red. We're unchanged here. We've had just a steady leak here. Dennis
That's
has
that
said
that RTX seller. He's now or she has moved into the entire market here. RTX seller is not stopped, Joel.
Yeah,
This
it's
RTX
definitely.
seller, it's down 7% now. This engine must be everything. Although they raised guidance, they weren't that concerned about it, but this engine must be everything because holy mackerel. This
Of
thing is
course,
just it's going to be the disaster stock of the
seeing
day.
that, Dennis, seeing that just keep leaking, don't you feel like maybe Lockheed Martin takes a hit today?
Yeah, oh yeah, for sure. I was actually, so here you go. I was long Lockheed Martin
Relationships,
over.
baby.
Doesn't that suck when you're long LMT overnight? But I sold that as soon as I seen that RTX start tanking. I'm like, I'm getting out of that LMT too. I got around 455. So I'm like, you take your loss and you move on. So yeah, I was long the LMT overnight. I'm like, no, as soon as you see that RTX tanking, you get out. I was one of the first people to sell LMT earlier this morning.
Yeah, let's take a look at Disney. Disney did have a sell analyst rating, so this is real quick. I'll just take a look. To me, I think this is still a sell. I think eventually Disney might get to like $50. I wouldn't touch this thing.
50,
oh
huh?
man,
I'm
don't think
really
it's going to $50.
I'm with
I'll
that,
tell you,
Joel.
I'll be buying
it.
I'll be buying it well above $50.
I'm in that camp.
I am not a fan either. The question, 85 is huge. And we have seen this happen before, Joel, where we've seen the downgrade, the Johnny come lately downgrade to sell, and then they buy it in their face. We saw it with Tesla last week. So, I mean, is there the opportunity that this could turn around on this downgrade? Maybe, but this thing has been hanging out for so long. I am not long Disney. I love the company. I don't love the management right now. So I love the thought of owning Disney, but the management has just been a mess. Like we've said, they're firing on no cylinders, especially if they start losing the parks. There's major problems at Disney still, major problems, which is why I continue to just stay away from it. But just be cautious, just saying, okay, well, this is going to be the time it takes it out, because you never know. Sometimes they turn around, they buy these things on the upgrades or on the downgrades.
Before you do anything in Disney or any of these media stocks, I know I was out last Friday, but Josh had Michael Pachter on, who of course guided us through the Microsoft Activision merger, and he just thinks what they're doing at Disney, they're doing it everything wrong, as far as the streaming, as far as where they're spending the money. I just put it up there on in the chat. You got to go back about 5-10 minutes in, listen to that before you do anything in this space. Michael Pachter nailed it. Down a buckle one. They're thinking of canceling movies. I mean, 85. I mean, you're getting near your COVID low here.
Writers strike affecting them.
Yeah, the writers, 7907
Nothing
here.
working.
So nothing going on. Oh,
I love Disney for a long time, but it's just been down here for too long now, and they got too many other issues happening. I kept thinking the parks would lift up the other sectors. So just as much as Tommy Lackey, it's funny you talk about divert and rotation, that the lifeblood of. Well, in Disney, the funny thing is the parks have kept this stock up because everything else has been a disaster. But now we're talking about the parks not doing as well. and then we don't know if that's true. And obviously, we had Iger on there and he was trying to put that, rumor to rest. But, rumors start for a reason here. And people can obviously tell going to parks. And if people are saying it's a little bit slower right now, that's problems, because the only reason that Disney has held up as well as it has with ESPN, an epic failure, Disney Plus not doing well at all, the only reason is the parks have still been killing it. Now maybe people are saying, I don't want to pay $150 a person to go to the Magic Kingdom. Would I pay it? Yeah, but I'm not going to do it every year. You're not going to. So I think there's an issue with just they're pricing themselves so high here now too. That's the issue too. So Disney definitely has some problems. Is this downgrade late to the party? Absolutely. Does it eventually have a rally somewhere? Is it going to 50? I don't think it's going to 50, but could it go to 75? They've got a lot of problems. They start losing those parks. The answer is yes.
And that's my biggest outlook, is just starting to see Netflix drop off as much as they are. And I think that the only thing was maybe keeping it alive was the Disney Plus outlook. And if Netflix is going to take such a beating on their report, which was actually pretty decent,
yeah,
one thing that I'd be looking at Disney to keep getting hit harder. But that's just my outlook there. Of course, we'll see if Disney can turn things around. They need something to give them an actual tailwind, right? They have a bunch of headwinds on top of them right now, which aren't looking good. Now let's go ahead and wrap up. The last thing I'll just wrap up with, I'll look to see if oil stocks can continue higher. I did sell my Valero already. That was just too good too quickly. I mean, I'll take that any day. That was like a 3 or 4 day trade. And 3 or 4 days green. Yeah, you take the money and you run. Now we're getting a little bit of a pullback on oil. I'm going to be looking that maybe we can get this pullback and continue going, right? So
been a good run for oil.
Yeah,
value
trade
nice has come back into favor. We've been talking about that.
XLE,
I think you're right as a trader to be lightening up into it, though. You got to keep thinking that. To Tommy Lackey's, point on interest rates, and as he made so many good points, but we didn't really talk and expand on that. Mm-hmm. If interest rates do stay high, it's not enough that they keep going higher, but if they stay up here, it's got to eventually start slowing down demand. You cannot keep interest rates. Consumer will find money in the short term. They find money, they jack the credit cards higher. They can, be good for a while. But if rates stay up at 6-7%, for the foreseeable future, like they don't drop next quarter, they don't drop early next year,
and real inflation not dropping, right?
Slow, yeah. Well, that's
real inflation not dropping. Then the interest rates start to affect the consumer, right? It just,
I think they do eventually. So that's what keeps you a little bit, you see this rally, and it's been such an impressive rally. But if you're ringing the register into this and you've been it right, I won't argue with you on any of this stuff. It's a reason I only stayed half invested, which was definitely wrong. People can make fun of me for that. And that's fine. I just, had half my money in cash because of the uncertainty. Didn't have it all in cash. Wasn't short the market, but wasn't fully invested for a long time and missed this, missed half my money, missed this run pretty well. And do I think we pull back eventually? I think we do eventually. I don't know what the catalyst is going to be for that, but I do think we are extended here now. I think if you're coming and really buying stocks now, I think you're really late to the party.
Yeah, it just gets hard when we're in this kind of exuberance mode. And that's one thing that I would say too, because yes, are we extended? Hell yeah. But does that mean that we can't keep going?
We can.
No, we can keep going. Yeah.
Yes, we can.
Microsoft mentions good AI news today. They beat and talk about maybe, I don't know, a new product or something like that. Google comes out and tells us that they've been kicking ass with their Bard.
Could change things.
Yeah, we could still keep this riding higher. That's why I've been saying, at least for right now, I'm still just in the bullish camp. This seems like bubble environment. When we get positive catalysts, stocks rip higher. When we get negative, stocks barely go down.
Or they get bought, or the dips get bought.
Or the dips get bought. Until that changes, right now, I just still see the exuberance in the market. We'll see what happens, right? Like always, guys can keep up with everything Triple D does at Triple D Trader. Give him a good follow on Twitter. Always good to have you, Dennis. Go do what you do best, my friend. Get to your trading action.
Great show today. Good job.
All right, let's go ahead. We'll bring you guys over now to live trading action. I hope you guys enjoyed the action here, of course, on Premarket Prep. We've been doing great. We talked about yesterday, China stocks up, right? I was wondering, would the China stocks actually get that lift? They did get the lift yesterday, even though technology stocks were getting hit. We'll see if that continues. Things like this. That's what we're here for on pre-market prep. We can't tell you what to trade. We can only point to like, hey, look at this area. These are the catalysts that are going on. These are the potentials that could come. You guys make your own investment decisions. I hope you guys enjoyed everything that we do for you guys here on pre-market prep. Thank you, Tommy Lackey. I did see in the chat that you're looking for someone that has AWS server skills to get your charts back up. Hey, someone reach out to my man, Tommy Lackey. I will be doing the retweet on Twitter. You guys can always follow me on Twitter at MoneyMitchBZ. Check out the Sunrise Report. The Sunrise Report is something that I've been doing with pre-market prep. You know, of course, we get all these news together. I've been trying to give you guys a quick little recap in the morning. You guys can follow me, of course, at MoneyMitchBZ, or I retweet it. It's out on Benzinga's Twitter, of course. You guys go ahead and give it a nice retweet. We'll see you guys over to live trading. That's coming up next. And keep going at it, guys. We will be getting deeper and deeper into the book club today as we keep going through what Market Wizards, of course, if you guys want to check out and learn a little bit more, up your skills, come to the book club, of course, as we continue going. We've already been through 3 books this year. I want to keep going. I want to get through 4, 5, 6, 7 books if possible. So smash the like. I will see you guys over on live trading. Let's get after it. Let's see what I can come up with today. I got some swings on. I got about 5 swing trades on right now. Actually 6, including the Moo Life. But let's come over. Check it out, guys. Small account challenge up 25% now. Let's keep it going, guys. Hit the like on the way out.